Bitcoin is approaching a critical decision, and the next 72 hours could determine whether BTC makes another run towards $70,000 or gets pushed back towards $60,000. Ethereum is also challenging the road toward $2,000, but there's a warning: nearly $500 million just exited US spot Bitcoin ETFs across only 2 trading sessions. And now, the Federal Reserve is about to make its next move. We also have US GDP, inflation data, institutional flows, and major crypto regulation developments in Washington. So today, we're breaking down the Bitcoin and Ethereum price action, the key levels that matter, what changed since Wednesday, and 3 scenarios that could determine where crypto goes next. Let's get into it. Starting with Bitcoin. Bitcoin has recovered into the $65,000 area, but simply touching $65,000 doesn't confirm a breakout. The first important area I'm watching is around $65,500. If Bitcoin breaks above that level and holds it, attention shifts toward the $66,000 to $67,000 resistance zone. That's where this setup becomes much more interesting. A convincing breakout above $67,000 could put the $69,000 to $70,000 region back into play. But $70,000 is a conditional target, not a guaranteed prediction. Bitcoin needs confirmation first. On the downside, $64,000 is the first important level. If Bitcoin loses that area, the low $63,000 region becomes important. And if that structure breaks, $60,000 becomes the major psychological support zone. So the Bitcoin map is relatively clear. Above $65,500, momentum improves. Above $67,000, the bullish case gets stronger. Below $64,000, downside risk increases. But there's another signal we need to watch: institutional money. On Thursday, US spot Bitcoin ETFs recorded approximately $225 million in net outflows. Then Friday brought another approximately $240 million in withdrawals. Combined, that's roughly $465 million, leaving Bitcoin ETFs in only 2 trading sessions. That doesn't mean institutions have suddenly abandoned Bitcoin, but it does tell us institutional demand weakened heading into a major macroeconomic week. Now watch what happens next. If Bitcoin breaks resistance while ETF inflows return, those signals reinforce each other. But if Bitcoin gets rejected while ETF outflows continue, the bullish setup becomes considerably weaker. Now let's move to Ethereum. Ethereum is fighting around the $1,900 region, with $2,000 becoming the major psychological target. If ETH breaks $2,000 and actually holds above it, that would strengthen the argument that Ethereum's recovery is developing beyond a short-term bounce. But if Ethereum gets rejected and falls below 1900, momentum begins weakening. Below that, watch approximately $1,875, followed by the larger $1,800 support area. There's also another chart worth watching: Ethereum versus Bitcoin. If ETH rises against the dollar while also strengthening against Bitcoin, that would provide stronger evidence that capital is rotating beyond BTC, and risk appetite across crypto is improving. So don't only watch whether Ethereum reaches 2000, watch whether ETH starts outperforming Bitcoin. Now let's talk about what changed since Wednesday. One important development came from the US labor market, where initial unemployment claims dropped sharply. Normally, strong employment sounds positive, but for financial markets there's another side to the story. A resilient labor market gives the Federal Reserve more flexibility to keep monetary policy restrictive if inflation remains elevated. Higher rate expectations can push Treasury yields higher, strengthen the dollar, and reduce demand for risk assets. And that leads directly to the biggest event of this week, the Federal Reserve. The Fed begins its 2-day meeting on Tuesday, July 28th, with the monetary policy decision arriving Wednesday, July 29th. For Bitcoin and Ethereum, the rate decision itself isn't the only thing that matters. The market will be listening carefully to what the Fed says about inflation, economic growth, and future monetary policy. If the Fed sounds more hawkish than expected, Treasury yields could rise and crypto could come under pressure. But if policymakers sound more balanced and yields move lower, Bitcoin could receive another opportunity to challenge resistance. And the volatility may continue immediately afterward. Thursday brings the advance estimate of second quarter US GDP, along with June personal income and outlays, including the Federal Reserve's closely watched PCE inflation data. That means markets will process the Fed decision, economic growth, and fresh inflation information within a very short period. Hotter inflation could strengthen expectations that monetary policy stays restrictive. Softer inflation could reduce some of that pressure and potentially support risk assets. So watch more than Bitcoin. Watch Treasury yields. watch the US dollar, watch equities, and watch institutional crypto flows. If these signals begin moving together, we'll have a much clearer picture of where the market is heading. There's also another major story developing in Washington: crypto regulation. Lawmakers continue working on the Digital Asset Market Clarity Act, better known as the Clarity Act. The goal is to establish clearer rules for digital assets in the United States, and regulatory clarity matters enormously for institutional adoption. Large financial institutions don't only care about tomorrow's Bitcoin price, they want to understand what rules will govern digital assets years from now. But the legislation is still developing, so investors should treat clarity as a potential catalyst, not a guaranteed bullish event. Now let's put everything together into 3 scenarios. Scenario 1, the bullish breakout. Bitcoin clears 65,500, then breaks through 67,000. Ethereum reclaims 2,000, ETF flows improve, Treasury yields fall, and the Fed is less hawkish than feared. Under that combination, Bitcoin's $69,000 to $70,000 zone becomes much more relevant. Scenario 2, rejection. Bitcoin loses 64,000, Ethereum falls below 1,900, ETF outflows continue, Treasury yields rise, and inflation comes in hotter than expected. That could put Bitcoin's low $63,000 region back in focus, with 60,000 becoming the larger downside level. For Ethereum, watch 1,875 and 1,800. Scenario 3, consolidation. Bitcoin remains trapped around the mid-$60,000 region while Ethereum continues fighting between 1,900 and 2,000. Markets could simply wait for the Fed, GDP, inflation, and new ETF flows before choosing the next major direction. So here's your checklist for the week. For Bitcoin, watch 65,500, then 67,000. A confirmed breakout makes 69,000 to 70,000 much more interesting. On the downside, watch 64,000, then the low $63,000 region. For Ethereum, 1,900 needs to hold, while 2,000 is the major upside test. And beyond the charts, watch Bitcoin ETF flows, Treasury yields, the US dollar, the Federal Reserve, GDP and PCE inflation. Because this week, technical analysis and macroeconomic catalysts are colliding at exactly the same time. Now I want your prediction. What happens first? Bitcoin breaks $70,000 or Bitcoin loses 64,000? And does Ethereum finally reclaim $2,000? Drop your BTC and ETH targets in the comments. And if you want Bitcoin analysis, Ethereum analysis, crypto news, and the macro events moving the market without the hype, subscribe to MarketPulse 360. I'll see you in the next market update.